Shares of Amazon.com, AMZN, are down $13.58, or 0.8%, to $1,736.50, after the U.S. Supreme Court ruled by 5-4 that states have broad authority to force online retailers to collect potentially billions of dollars worth of sales taxes, according to the write-up by Reuters. A related story, The Wall Street Journal's Brody Mullins, Laura Stevens, and John D. McKinnon have a longish piece out this morning about how Amazon has become deeply entwined with the federal government. The story describes how Chief Executive Jeff Bezos has built one of the largest lobbying operations in Washington, bigger than those of powerhouses such as ExxonMobil and Walmart. That lobbying force includes almost 100 individual staffers at more than a dozen lobbying firms, write the authors, and costs Amazon $13 billion per year. The story also has a nice pic of Bezos' $23 million home in D.C., a former textile museum that is being renovated to have 11 bedrooms. The story notes Amazon's Oz cloud computing operation may have $2.8 billion worth of business with the U.S. government this year. Regarding the battle between President Donald Trump and Amazon, the story notes that Bezos or other executives have deliberately avoided responding to Trump tweets, because a public reaction would draw more attention, citing multiple unnamed sources, a strategy known as "don't poke the bear." As for regulation of Amazon, the story offers up some already known stuff about Vermont Senator Bernie Sanders publicly criticizing the company on worker pay. Intel's CEO exit leaves company in a pickle. Shares of Intel, INTC, are down $1.23, or 2.3%, to $52.23, after CEO Brian Krzanich this morning resigned, after it was discovered by the company that he had a consensual relationship with an Intel employee, which is against the company's non-fraternization policy for managers, as John Swartz relates. CFO Bob Swan is temporarily stepping in. For more on Swan, see my February interview with him. Intel took the announcement as the moment to also tell the street it was raising its outlook for the June-ending Q2 to revenue of $16.9 billion and 99 cents per share in net income, above the street's average estimates for $16.3 billion and 86 cents, respectively. The immediate question is, who might take over? Cowen. Krzanich's resignation comes at a difficult time for Intel. We fail to see a clear internal long-term successor given recent changes to senior management, and lists all the major execs who've left in recent years: Diane Bryant, Stacy Smith, Kirk Scoggin, and Renee James. All the changes at Intel in recent years may make succession planning difficult, opines Ramsey. The other question is what to do with Intel's repeated delays in making chips with the smallest feature sizes, 10 nanometers, which has given competitors such as Advanced Micro Devices, AMD, a sudden advantage. Mizuho's Vijay Rakesh, who has a buy rating on the stock, writes that CEO BK was known for his strong manufacturing background, and while Intel has lagged with 10 nanometers delays, it becomes important for INTC now with a gap at the top. But Stacy Rasgon of Bernstein, who has a market perform rating on the shares, of course. BK will go down in history as the CEO that let Intel's process leadership advantage slip away. When does this Micron cycle end? Shares of Micron Technology, MU, are up $1.53, or 2.6%, to $60.48, continuing last night's gains, after the company beat fiscal Q3 revenue and profit expectations and also forecast this quarter higher. Price targets are soaring today, some into the $100 plus range. Hans Mosesmann with Rosenblatt Securities reiterates a buy rating and raises his price target to $120 from $115, observing that the company is executing near flawlessly. Mosesmann finds it interesting that the call made clear that memory and storage content continues to increase in most target segments, and there is no evidence of content bespeccing in any market segments, which historically can happen in an overheated market. And Stifel Nicolaus's Kevin Cassidy, reiterating a buy rating and raising his target to $108 from $106, writes that the bear argument against the stock, the notion of a memory cycle peak, is nowhere to be found. That fear of correction is why the market has given the shares approximately 6x forward earnings valuation for the past year, he observes. In our view, this beat and raise earnings report clearly suggests we're not there yet, i.e., the cyclical peak. While we continue modeling out quarters to eventually return to a normalized trend for average selling prices declining in line with cost declines, it's difficult to find the catalyst that starts the decline. But of course the bear argument won't really go away. Timothy Arcuri with UBS writes that he heard little on the call to sway either bull or bear on the notion of a correction, and he continues to believe a big correction is possible in 2019. He reiterates a sell rating and a $42 price target. Goldman likes Lumentum. Verizon. Goldman Sachs analysts had a number of revisions to ratings today amidst a shifting of coverage responsibilities. Among the interesting notes, analyst Rod Hall, taking over coverage of fiber optic component vendor Lumentum Light from Doug Clark, raises the stock to buy from neutral, with a $79 price target, after concluding that a detailed 3D sensing modeling he conducted shows upside versus consensus in SI-19, as we believe consensus is underestimating the iPad, Android opportunity as well as average module maker yields. 3D sensing is the technology of augmented reality that's in, for example, Apple's AAPL iPhone X. The other major one today is Brett Feldman raising his rating on Verizon Communications, VZ, to buy from neutral, with a $56 price target, up from $51. Feldman acknowledges that all the vertical mergers at the key success factors in telecom have not changed materially, writes Feldman. These are 1. Key network assets and capabilities, 2. Large customer bases and market share, and 3. Strong financials and capacity to invest. Lumentum shares are up $2.10, or 3.7%, to $58.60, while Verizon is up 64 cents, or 1.3%, to $48.73. Sign up to review